Did you know that the taxman can ask for his share of interest on your savings account? Hi guys, my name is Omobolaji and I will be talking about how to earn up to £1,000 on your savings account and keep this money out of the taxman's hand. Welcome to my YouTube channel. Alright, as a disclaimer, I'm not one to advise people to just save money in their savings account. However, there are times when you need easy access to your money. For instance, money like your emergency fund, deposit you're saving for your house, and also just maybe money for day-to-day running of the household, holidays you're planning for. Your savings account are a good idea of where to save your money for things like this. So when it comes to savings accounts, there are 4 basic types of savings accounts available in the UK. There is the easy access savings account, the fixed deposits account, the notice account, and then there is a regular savers account. So you see, the easy access savings account, just like the name describes, is an account where your money goes in, you paid interest, and you have the flexibility to have access to your money anytime you need it. So there are some banks offering this particular type of account. For instance, the Coventry Building Society offers up to 3.25% from the 6th of January. However, this account allows you up to only 6 penalty-free withdrawal, and they have only an online presence. There are other two which I prefer because they have an application, and due to the fact that you have unlimited withdrawal access to your money all year round, and that is the Super account offering 2.8% and also Atom offering 2.55%. So these are these are kind of like the top ranking easy access accounts that are available out there. Moving on to the fixed deposit account, which a number of persons are actually quite familiar with, requires you to keep your money in a particular account for a particular period of time, and in exchange the bank offers you an interest rate. For instance, Shabrook Bank is offering 3.75% for 9 months period. So if you keep your money in the bank if you keep your money in Shabrook's bank, they will be offering you 3.5% per annum for the 9-month period. Then for Atom Bank is also offering 3.35% for 9 months. The reason why I still prefer Atom to Shabrook's Bank is because Atom has an application which allows you to monitor your money easily, while Shabrook's Bank has an online presence, like you have to go onto the website to access your accounts. Then this fixed deposit account is closely related to the notice account. For the notice account, you also have to keep your money in a particular account. However, the difference is in the fact that you have to give them a notice of a certain number of days which has been previously agreed on. So the number of days on notice account vary from 90 days to 120 days. So say you would need to use your money in the next 3 or 4 months, you'd have to give them a notice from today for you to have access to your money when you need it, when it comes to the notice account. So when it comes to notice accounts, Mansfield Bank is currently offering 3.5%. However, the disadvantage is in fact that you'd rarely find their branch and you'd have to open an account via post. I don't think another one which is like quite better because you can open it on application and online is the ACOUNT Bank, which is also offering 3.2% for their 90 days notice account, which is actually quite fair. So now to the GCS bit, which are the regular savings accounts. These are the highest paying savings accounts, and they are mostly divided into two. There are some which you have access to only if you have a current account with that bank, and there are some which you have access to, like readily available. You can open just their savings account without having a current account with them. So for the ones which you have to open a current account, we have the First Direct, which pays 70%, and the interest rate is fixed, which means it doesn't change over the year. It is 70% for over the year, and the maximum you can pay into this account is £300, with the least being £25. They have an app presence, which is lovely, and you cannot withdraw your money, because it's either you decide to close the account, which means they will offer you a lesser rate. That is their regular savings variable account, and which is a lesser rate, and followed by this is the Barclays account. The Barclays account offers variable rate, which is currently 5.12%. However, the advantage of this is the fact that you can put your money in at once, which the maximum is £5,000. You can put your £5,000 in at once and earn your interest from the beginning of January to December, like from the beginning of the tax year to the end of the tax year. So now what this means is the fact that for the ones which you put in the money in every month, at the end of the day you probably end up getting like half of what the interest is supposed to be. Why is this? Because you put the money in installmentally, and they earn interest rates installmentally. Like the interest was not from your maximum amount from the beginning of the tax year to the end of the tax year. But with the Barclays account, you can put your money in at once and get your interest from the beginning of the time you put your money in till when you withdraw it. Then we have the Lloyds Bank account. For Lloyds Bank, you need a Club Lloyds current account for you to open your savings account, which offers you 5.25%, and the maximum you can put into this account is £400, and the minimum you can put into this account is also £25. The interest rate is also fixed, which means it will not change during the time you have this account for a year. And they also have an app presence, which is beautiful, which I think is like makes it easier and gives you easy access to your money basically. When it comes to the one that is readily available to you, there is Nationwide Bank, which offers a 5% variable interest rate. So at the end of the day, now you ask me, like, with all this interest rate, how do I get my £1,000 at the end of the year? If you think of it in terms of the fact, like for instance, if you have a lump sum which you cannot put directly into your regular savings account, your best option is to open an easy saver account and set up direct debit for this money to go into your regular savings account. That way your money is earning the maximum interest. Now you see, yes, this interest rates may look small, they may look so minute, but if you compare it to what your current account is offering you, you realize that this is a better deal. However, another thing I want you to know is the fact that all banks that I've mentioned to you today, all financial institutions mentioned in this video today, are covered by the FSCS, which means that your money is covered up to £85,000. So even if anything happens to your money, like you are safe, you are definitely getting your money back, and which means like you're bearing little, like which means you're bearing almost no risk to yourself, because you would get your money back up to £85,000. And in the first instance, if you have up to £85,000, I would not advise you to save your money in all these accounts, because at the end of the day you end up paying tax. Your best option is to put it in cash ISAs. That is your best option. Another thing that a number of banks are currently doing is offering you a bonus when you switch your current account to them, and this bonus range between £150 to £200, which is maybe not a lot, but at least it will go a long way, because when we become penny conscious, then our pounds start to make sense. I need to talk about this more. I could do that in another video. However, so we've come to the end of this video. All right, guys, see you next time. If you got any questions, you can put it in the comment below. Just like and subscribe if you like to see more of me. Bye.